Hey everybody. So today is Fed Day and we had quite a bit of other news come out today as well. So I am going to cover the Forex Factory calendar, and after that I will just talk about some of the other items that came out today. So like I said, today's Fed Day, so that was the biggest item that we had on the Forex Factory calendar today. And whenever we talk about Fed Day consists of a couple of things. It consists of our rate, which is the biggest thing that everyone talks about. But then we also have a statement that comes out. We also have a press conference, and then in addition to all those things today, we also had a news item for economic projections. All these items can be found on the Fed's website. If you're ever on Forex Factory calendar and you want to find these items, you can just click on the little manila folder, and then once you click it, it'll give you an area. Actually click the one for FOMC. It'll give you a source link. You can click it. It'll take you to that source. We'll come back to economic projections, but as far as the rate is concerned for today, we did get a 25 basis point increase, and it is projected that we will get 6 more increases throughout the year. The Fed has said that at every meeting, every major meeting that they have this year, they're going to increase rates. So that kind of gave the market a signal as to what to look forward to for the rest of this year. Also, in addition to that, with not only US items, but global things that are going on, it kind of puts you in a position to know and understand how to treat and how to look at the rest of this year. So going forward for the rest of this year, for me, I'm really looking at the money supply. I'm looking at how much money people actually have in the bank versus how much they're spending. Then I'm also looking at the I guess you could call it the outstanding money supply. So how much money is just free floating out in the economy? I care about those things because that will let you know what credit situations will be like. That will also let you know how confident the people are. That will let you also know if the Fed is tightening too much or if they're not doing enough. So the whole purpose of increasing interest rates is to dry up the money supply. It's like taking a sponge, putting it down like in a puddle of water. The sponge is like soaking up all this extra water that's just there, that doesn't need to be there. So that's what I'm going to be looking at every time the Fed has a meeting. Every time they have a meeting, I want to make sure that I'm keeping track of those things. You can keep track of those things by like there are people out there who just do it for you, so you don't have to do the heavy leg work. They track the money supply. Also looking at bonds, looking at things in the long term, looking at those rates. I care about those things. I care about treasuries and stuff like that, because when we talk about the yield curve, people always talk about the yield curve inverting, blah, blah, blah. What is that based on? It's based on rates, and you're comparing the rates of short-term versus long-term rates. And so, yeah, I'll be looking at all of that. All of that stuff matters. All of that stuff factors in when we start talking about the Fed. But I'm going to back up a little bit because we did have another item that came out today that will tie into Fed news as well, and that was retail sales. Retail sales were down. And this isn't really surprising to me because this is February compared to January because it's month over month. You never look at the current month that you're in. You always look at the month previous and then the month before that. So, when we start looking at people's spending, consumer spending in the United States, coming off of the year that we had in 2021 and how we actually started the year, that the first week of the year, let me put it like this, the first week of the year will give you a really good indication as to how your first quarter is going to go, and will also give you a really good idea as to what the sentiment of the people will be, at least for the first quarter. If what happens in the first week of the year continues to happen, then that sentiment is going to last a lot longer. So the first week of the year started off very rocky, which is why I was like, just go ahead and expect between now and April to be this way. How you start a thing is typically how it continues for a little bit and how you finish a thing. People say that a lot, but if you really look and pay attention to, especially the markets, the economy, it really carries over into a lot of different areas in life. So those that news that we got at the beginning of the year is definitely starting to now carry over, because what happened in January is still technically happening. The markets started off very rocky. They slid. That put a lot of fear and uncertainty in people's minds. So that carried over into February. And then this is what we're looking at now. These numbers are for last month. That carried over into February, and we're still looking at the same situation in March. So it would not surprise me if when we get retail sale numbers for March, which come out next month, that they're going to look the same. It would not surprise me. Also, it wouldn't surprise me for another reason, just because it's the end of the first quarter. It's the end of the first quarter. Business owners, especially small business owners, tend to not spend as much, because responsible business owners and those business owners who have varying revenues, they pay quarterly taxes, and they would have to pay taxes this month or at the beginning of next month. This is like, we're in the middle of tax season anyway, but those are the other reasons why. Second quarter might pick up a little bit more because people will have gotten their tax refunds for the most part and will be looking for places to spend that money. However, with uncertainty in the marketplaces, because every market right now has some level of uncertainty in it, because markets are interconnected. So when we start looking at data, when we start looking at how people spend their money during the second quarter of the year, when the first quarter did not start out well, or in a year where there's turmoil, people tend to not spend that money because they are unsure of what's going to happen. There are so many layers of uncertainty in the market right now beyond Russia that would lead the everyday person to not want to spend their money. We have job situations, we have inflation. So many different areas now are starting to see inflation that it's kind of hard to ignore. It's very hard to ignore. If by this time the Fed and the Treasury had not said that inflation wasn't transitory, people would be looking like these prices are not changing. They're still the same. So it's everywhere. So jobs, wages, inflation, you can just go ahead and add Russia into the mix. You can add the increased use of cryptos into the mix, the increased thought process and knowledge behind the value of the dollar and its place in the world. Speaking of its place in the world, let's see, hold on. I was going to see if there was another place for me to talk about it. There's not, so I'll bring it up now. China. So I told you guys all last week that everybody's focused on Russia. I don't care about Russia at this point. Like, everybody's going to focus on Russia. It's smoke and mirrors. It's like we get our attention span glued on one particular thing because of the media. But when you start to do independent news research, not only here in the United States, because it's super biased, but around the world, you'll start to notice the areas where you have to pay attention. China, everybody's like overlooking China. People are starting to talk about North Korea and their missile launches. Don't care. They're not our competition. They're not next in line, or they're not like, okay, think about it as a race. I told you about the top 10 governments, the top 10 economies in the world. If we're looking at each country as a person in a race, Russia is not behind us. North Korea is not behind us. China is literally like able to stick its leg out and stick their foot in between our feet and trip us and make us fall. That's how close they are. If you look in some respects, they're either beside of us or ahead of us. I don't care about everybody else. You have to be paying attention to your biggest competition, what their next move is and what they're doing. China stating that they would possibly or are in the works of doing oil transactions outside of the US dollar. Like, come on. When China starts doing business with their partners, their biggest partners being those countries that I mentioned that aren't necessarily our competition directly, when they start to do transactions with those countries and countries that have big populations outside of the US dollar, that's a problem because that starts to take dominance away when you have the next biggest player doing business with the third, in some respects, the fourth biggest player outside of the US dollar. We really have to get our priorities in order. We really have to start just doing better as a people with understanding how governments work. What I just said has shown up in a couple of articles like here and there. It's not mainstream. What they're focusing on right now, mainstream, is the fact that there was a theater in the Ukraine that was destroyed, that Putin and Russia are collapsing. They'll focus on the market. They'll focus on sanctions. They're somewhat talking about Biden providing aid to the Ukraine, which will in turn not work out favorably for us here in the United States. But I say all of that because those are delayed items. Our focus isn't there right now. Those are going to be delayed reactions that also affect retail sales. I was still talking about retail sales and consumer sentiment there. So those things I just mentioned, they're not in our focus right now. We're not focused on those things. Those things will come out and be a big deal. The whole China thing will be a big deal later on this year, especially when we start talking about our budget for next year. I'm just trying to think like when some of these things would just be more forefront news. Maybe the end of next quarter, definitely third quarter, fourth quarter for sure, because we're talking about going into a new year, trying to, get all of our affairs in order. So, anyway, aside from all of that, aside from Fed news, aside from retail sales, we do have other news coming out this week. Whoops. So we do have other news coming out this week. And the news that's coming out for the rest of the week, we have unemployment claims. Unemployment claims are going to affect the market in the exact same way that the markets were affected today. It's also going to help add another layer of volatility to what's going on. So as the Fed increases rates, you have to understand this concept. If you don't understand this concept, I'm not trying to be a smartass, but YouTube it, listen to the podcast, or ask seriously, because these rate increases are going to continue through the rest of this year. And if you don't understand how this is going to impact you, your job, your banking, and everything around you, then you'll be at a huge disadvantage. So as the Fed increases interest rates, it makes the availability for credit and money smaller. So the whole purpose, like I stated earlier, is to dry up the money supply, to get money out of the free floating money pot that's out there. So jobs, employers are not able to just go to the bank or go to each other at a cheap rate anymore. They have to pay more. So they will tend to spend less for hiring, for benefits, and also for research and development, or M&A. So a big example of this is Facebook. If you go Google search what Facebook just did with their benefits, they're starting to cut benefits. Some of these luxurious benefits that some of these jobs are offering or have been offering for like the last decade or so, that's going to get cut out, because now the money that it takes to fund those things is going to get more and more expensive. The potential to get a raise will be less and less likely as rates go up, because it just becomes even more expensive than it was, because now those employers are going to have to spend more money to get what they need, because they're going to have to pay a higher interest rate for that money. So they're going to be less likely to take loans and borrow money. So what they're going to do is use a little bit from the pot that they have. And if they provide a product, they're going to charge a little bit more. They could also do so for services, but companies that release products tend to increase prices to help cover, because remember, at the end of the day, most corporations, most, not all, corporations that are listed on an exchange answer to their shareholders, in the sense that they want to make sure their shareholders get paid. And also, speaking of shareholders, companies sometimes tend to cut their dividends when interest rates go up. So having those value stocks Value stocks always work when interest rates are low or are being lowered because companies have pools of cash that they're just willing to divvy up and say, thank you for holding our company. Companies will buy back their own stock. If they can't do those things that I just told you, will buy back their own stock and will artificially decrease their shares that are outstanding to be bought, which supply and demand, if the supply is low and the demand is relatively the same or higher, your stock price goes up. You can kind of see that when Amazon announced their stock split. There you go. They bought back some of their stock. So then over time, they can slowly release if the retail demand for their stock doesn't appear in the marketplace when they lower their stock price. And then Friday, sorry, I just want everything on one screen so I can just scroll. Friday, the biggest thing we're going to be looking at is existing home sales. Existing home sales, again, because it's a long-term thing. Buying a home is not something short-term. This is also going to feed back into the Fed. It's going to feed back into rates. It's going to feed back into the mentality behind retail sales, which is what's going on in the overall market that the everyday consumer thinks about or will have to think about. So if retail sales are down, and these are short-term items. So in the short term, retail sales is what you get up and decide to go to the store to buy right now, tomorrow, the day after. A home is more of a long-term thing. So if your short-term outlook is not great, you're less likely to want to make a long-term purchase at the moment because you're in a wait and see type situation. With housing, it's a little bit different because people are trying to hurry up and buy houses to hurry up and beat rates before they go up. But that time has kind of dwindled. Ever since they announced that rates were going to be going up, mortgage rates started going up. So I still feel like existing home sales still feeds into that same sentiment though of people not being sure of what's going to happen or what the be like, 5, 10, 20, 30 years from now, however long a person decides to get a mortgage for. So that's that. We'll talk more about the Fed, economic projections, all of those things later in the week. The Fed talked about a lot, but they didn't really talk about anything. I say that because a lot of what they talked about, we've already talked about, or we already knew because Jerome Powell told us, or one of the other Fed presidents told us in one of their speeches last week and the week before, possibly the week before that. Things that we will be looking forward to, not so much this week, but next week. Durable good orders, and then just looking to see what oil inventories are going to be like. So I'll say two things and then I'll go. Don't let this drop in oil price fool you. Gas prices are not going to change. Like, oil prices spiked. They sold off because of what they said was not a surprise. It was kind of surprising when I saw the number, but an inventory surprise that they had. There's never a surprise in inventory. They always know how much they have. They know how much has been released, how much they have. What has happened is you get all this news around how much oil we're going to release, and then we just don't release it like we said we were going to. or we haven't released it yet. So don't think that, oh, oil is now under $100 a barrel, gas prices are going to go down. No, they're not. So just take that out of your mind. And then durable good orders, those are important for what Biden said today. If you didn't hear his speech, I think there's like a short Cliff Notes version of it online somewhere. But we're providing money to Ukraine to the tune of like 800 million or something like that. We've interjected ourselves now into a war that wasn't ours to necessarily fight. We're doing it now for ethical, moral, humanitarian reasons. Like, at the end of the day, this affects how we get our raw materials to make these durable goods that we use every single day. The things that we need to make batteries for cars, some types of oil, sand, metals. We're really starting to now just trying to really put this in a nice way, mess up our sources of being able to get these things reasonably in a timely manner. Supply chain issues. We thought we had supply chain issues before. We're now having to scramble because we decided to put sanctions on people, entities that we felt like it was going to be a thing to get this whole thing to be over with. They've turned around. Russia's put sanctions on the United States leaders, officials. This isn't going anywhere. Like, until a point has been proven and until fill in the blank, yeah, this is not going anywhere. So all of these items, all of these things that we're talking about, all of this stuff carries over. It's not going anywhere. Prices are not going anywhere. If anything, prices will go up and continue to go up because we're limiting how much supply we're going to be able to get. That restricts how much we're going to be able to produce. We're not going to be able to import like we had been if China continues to make the adjustments that they have been making, directly and indirectly. We will definitely have to become that independent nation that Trump wanted us to be, like doing everything and being self-sufficient. Like, we're supposed to be self-sufficient anyway, but this shows you how reliant we are on other countries. Durable good orders fall under that. We'll talk about that more next week, but I'm definitely going to be looking forward to the rest of this economic news that comes out for the rest of this week and tying all of this stuff into stuff that the Fed talked about today. That's all. Anything else that I had to say, we'll talk about it on Friday, or I'll just drop it in the group chat. But we'll go ahead and turn it over to Mr. Level so that he can get started with the technicals. And yeah, I'll answer any questions at the end.
Cool beans, cool beans. Thanks for that sauce as always, Corman. Thank you for blessing us with that tonight. Greatly appreciate it. Jump into these midweek technicals, everybody. In a second. Alrighty. All right, so looking at this upswing that we got from last week, um, we came back up to our market structure here um, at our 0.99 level. We didn't break above our market structure, and so we see this week we've been bearish to the downside. Um, and I'm looking for us to come on down and come back down and retest this previous low right here. Um, and if we can get below this previous low, and then I do expect us to come on down and retest our 0.97 level here. And if we get below this level, then I want to see this imbalance right here that we see here. I want to see this imbalance filled in. So that means that I do expect the dollar to be bearish for the rest of the week. Keep in mind that it is a heavy news week. Coleman just went over the fundamentals with us, so be aware of that. Govern your trades accordingly, please. Um, but I do expect the dollar to be bearish for the rest of the week. However, news come out and affect the market and cause the market to go in the opposite direction, then you know that we'll adjust for that. But for now, I want to see bearish price action out of the dollar for the rest of the week. So with that being said, let's look at our currency pair. Um, so yeah, looking at Euro USD, we know that our currency pairs move in the opposite direction of the dollar. So being that I'm expecting to see the dollar be bearish for the rest of the week, of course, I'm expecting to see Euro USD be bullish for the rest of the week. I'm targeting this area right here of imbalance that we see in price action. I would like to see Euro USD reach for that area. That is about a move. That's a move of about 157 pips. So even though today's Wednesday, we usually supposed to be out of the market by Wednesday, but I always tell you guys when we got high impacting news coming out on Thursday or Friday, you know, if you want to play in the market, play in the market. Just make sure you keep your strap in your hand. So govern your trades accordingly. But I am targeting this price level, which is around 1.1188. So yeah, I'm targeting that for price to reach up into that price level for the rest of the week. That's what I expect to see out of Euro USD. And looking at GBP USD, same thing. We could see a big move out of GBP USD. I see this, as you know, um, coined by my mentor, Michael Huddleston, this pool of liquidity here. Liquidity pool that I have marked with the dollar sign. Real clean, equal highs right there. I want to see price reach for that. We also see this imbalance that we have here above this little mini structure that we have here with those equal highs. So we could see a move of anywhere from 100 to almost 300 pips. Let's just say 300 pips. So we could see this move play out in a period of a few days, or it could take the rest of this week and going into the opening of the new market week next week to achieve this full move, but that's what I'm targeting for now. That's where my eyes are drawn to. That's where I see price action being drawn to. So, um, and if we get up in here, um, more than likely there wouldn't be nothing to stop price from going ahead and filling in all of this imbalance here to retest this structure. So y'all know how we do. We trade raw price action and market structure because at the end of the day, that's all there is when it comes to technical analysis. So that being said, looking at NZDUSD, I'm still staying away from it, even though, let me look back. Something, yeah, nope. Yeah, so we don't even have to look at it. Um, nope, don't even have to look at it. Looking at silver, I would like to see silver push back up to retest the structure here. Want to see us push back up. And if the dollar continues to drop, as I demonstrated on the dollar chart, then we should push through this structure and continue to push up to the upside to retest $26 and maybe create a new high. If we hold this structure um, and the dollar starts to push to the upside, let's say maybe news or something, fundamentals tomorrow, pushes it to the upside, then we'll see silver hold this structure and start to push back to the downside. So, but I do want to see us push up going into tomorrow to retest this structure, and then we'll see if we push through that structure and keep pushing to retest $26 for silver. Same thing with gold. We came back down. I told you guys Monday that if the dollar had some bullish movement that um, I expected to see these come down, but also the dollar, gold and silver has been correlating with the dollar, which is out of the ordinary because they supposed to push in the opposite direction of the dollar, move in the opposite direction. So with that being said, silver and gold have been moving along with the dollar. So that's why I told you guys that we could definitely see the dollar come back down and retest this 1917 level. And that's what we see that we got out of gold to start the trading week out with. We came back down to retest our 1917 level. And now gold is above that level. So we see if we hold this level. Um, but we have to see if gold continue to correlate with the dollar. If it continues to correlate with the dollar and the dollar continues to push down, then I see gold coming back down to retest our level down here at 1875. But if the gold gets back on course and pushing in the direction that it usually push in, that's inversely correlating with the dollar, then we could see a big push for gold to the upside to come back and retest the previous high of 2070 and continue to push to the upside to create a new all-time high, because I think the all-time high is 2075. Yeah. So yeah, let's see how that plays out moving forward for the rest of the week. Like I said, we shouldn't be in the market. But for all you Thundercats out there, if you want to um, still be in the market. Like I said, govern your trades accordingly. Looking at oil, um, Carmen spoke about oil doing fundamentals. She told you guys don't let oil price fool you, because oil did get back below my $100 level. I marked this structure for you guys Monday night. I told you guys that if we came back down to this $100 level and we got below there, that I want to see this structure retested and see how price action reacts to that structure. So now it appears that price action is accumulating at this structure, holding this structure, bouncing off of it. So I would like to see it get back above $100. And if we get an aggressive price action move above $100 and price come back down and retest it and doesn't break below it, then I want to see, that's when it will be a good entry to go ahead and buy some more oil to keep riding that bullish price action. So yeah, that's it for oil. Last but not least, my baby U30 Dow Jones Futures. Um, we see we let me get you back to Monday night. Monday night was here. Um, I told you guys that if we didn't get back above this price level and this high, I wanted to see price come back down, fill in the rest of this imbalance. You see, we got that to fill in. It came to retest this um, last down candle before this up move in this structure right here. Can't really see it because we're on the 4 hour, but if I go down to the hour, we'll be able to see it a little better. Um, there we go right here. Structure. Mark it up for Mr. Levels. Mark it up for structure right there. If I stretch it out, you can see price came down, kissed it perfectly. Shout out to the upside. We did get back above price action. Levels. Price levels. You know the motto when we get above price. Once we get above price levels, we break levels. We wait for the retest. We see the retest right here. Price broke here. See this down candle, then another retest and price accumulated, then shot up. And then we see today when the market opened up, London market open bullish, New York market open bullish. Price, that's time and price play for you right there. And then we see at 11 o'clock, the market sold back off down perfectly to our 33,395.8 level here. That's like perfect. But you can see where it came back down to. It came back down to fill in this little level of imbalance that we see here and here. Got to be good with your eyes. Bam. Right here. Came down in there, kissed it, and popped up to come up and retest this high and this high. And now, let me go back to the 4 hour chart. And now I'm expecting to see a little correction, a little pullback, right? As we see prices pulling back a little bit. I don't know if it's gonna come back down to retest the level since we just had this dramatic move in the in price action here with this long candle wick. We Let me look at the hour one more time. Yeah. So we may just have it to come back down and retest the top of this last bearish candle that we got before this aggressive bullish candle. We may see price action come down and retest the top of it, and then give us our next upswing to go ahead and finish filling in this imbalance right here, this imbalance right here. Remember, that's the imbalance that I told you guys from Monday night, that if we did get above these levels that I wanted to see price reach for. So it's reaching for it. It's halfway through there. So it's just got this little bit more to fill in for the imbalance. Um, and then when we get there, we'll probably see another correction in price action, another pullback. And when we come back down to retest, if we hold our levels when we get that retest, then these levels here will be our next target prices. Um, so that's what I see out of U30 for the rest of the week. Keep in mind that it is news heavy week. Um, Keep in mind that fundamentals do rule. Um, Technicals is a roadmap, but fundamentals do rule. So govern your trades accordingly. Um, don't be over leveraged. Always keep risk management first. Money in the pocket is always better than money on the table. And we don't predict the markets, we roll with the markets. So with that being said, I'll stop the recording at this time and take any questions.